Hello everyone, welcome to Trash for Cash. We are starting our very first video. I'm really excited about it because I haven't done anything like this before. Well, first starting out with one key term, which is the candlestick, and defining that. The next thing I want to say is that this whole trading thing is just to document my journey and to move forward. I'm not a professional trader. I'm not here to give advice to anybody, so this is just for um, entertainment purposes. And so, let's just get started with that. And let's look over to this graph here. I'm using TradingView at the moment, and TradingView is a platform you can get membership from at tradingview.com. It's like, I think it's $60 a month, and I'll just put a referral link in my comments if you want to get it to follow along with me. And it's really cool because you can paper trade on this account, meaning that you can trade with kind of paper monopoly money. And if you're into the trading trends and getting into it, then it's really cool to start with, because that's what I did. And it's awesome because you don't have to use your real money. You just use monopoly money pretty much. So let's look at Bitcoin right now, and we're going to be looking at Bitcoin for the majority of all this video and future videos. I found that Bitcoin has the largest volume of trades and market capital than any other cryptocurrency, and that translates to it has a lot more consistency within trends and indications than any other crypto that I've seen, that I've dealt with. Now, I prefer to use I prefer to use Bitcoin because of its consistency and its size. Now, if you are looking into all the smaller cryptocurrencies, they're a bit less consistent, and you'll see that their trading volume is also, and the market capital is actually smaller than the rest. Those are extremely risky, and I don't really have interest in even following those, just because of how volatile it is. It's crazy. But with that said, let's look into what this whole graph is here. Let's just pay attention to what's going on in this area. So let's not get distracted with all these numbers. I want to go step by step with you on exactly what I'm explaining here. Now, this graph, this red line and this blue line, this is a Bollinger band. And it's a mathematical equation that's developed by some German smart guy, and he made up this particular trend indicator. And what it is basically it tracks the average of market trend. Now we're looking at Bitcoin, and as you can see, within the band, there's these indicators, these little lines, red and green lines, called candlesticks. Now, candlesticks, we're in a time frame of 1 day. So each candlestick represents 1 day. Here, here, and here. Now the candlestick, and I'll zoom in for you, the candlestick actually represents when the market opened at this particular time, where this green hit. On the top of this green candlestick, the market opened for the following day, and at the end of this following day, it closed at this point, this horizontal line at the bottom of the red candlestick. Now the following day after that, when that closed, the next day it opened, and that day the volume went up and it closed at this point. So the green candlesticks influence and measure the market opening and closing, just like the red ones, how they open and close. The red indicates that it closed at a lower value. The green, next day, indicates that it opened and closed at a higher value. So it opened at the bottom and it closed at the top. It went from down to up, which is why it's green. The reason why it's red on this candlestick is because it opened and it went down when it closed at the end of the day. Now the day is indicated here where my cursor is. All right, so there's 15 hours. I use 24-hour military time, and that's just what I use. 15 hours, 17 hours, 19 minutes, and 4 seconds is when the next candlestick, this one in particular, will close before the new one opens. The skinnier parts are where the candle has reached and is now retracted. So here, for example, on this particular last candlestick, I'll zoom in for you. You can see this where it is. This is where it is now at the top of the green candlestick. Here is where it was earlier today, and it retracted back down at this point. For now, let's not talk about anything but where it is and what the candlesticks do when the market falls and when the market rises. When it falls, it goes red, and it rises, it goes green. Period. Now within this band, this Bollinger band, red and blue line, I have a set of markers called candlesticks, and when those candlesticks go above, they close above the Bollinger band, usually that's an abnormal sign. And as you can see here, what I like to call is the market is overbought. So Bitcoin is overbought at this point when that day closed and it opened. It is a point of reversal that I think. And what I mean by reversal is when there's an uptrend that changes to a downtrend, or a downtrend that changes to an uptrend. That's called a reversal. And as you can see here, the candlestick goes outside of the lower Bollinger band, which is, and you can see, I like to say it's oversold. So when it's oversold, then the price is actually lower than what it's worth, and the price goes up. There's a reversal point here. Now, the reversals I look at don't happen all the time, every time that the candlestick goes outside the Bollinger band. As you can see here, here was a reversal. The candlestick went way above and still closed, which retracted down and still closed outside the Bollinger band. But because there was a higher momentum of buying here at this point, it didn't reverse until it got here. So the market is risky. The market is not perfect with all the trends and indicators that you may allow. So to increase the chance of my probability of guessing reversals, I use more than one graph. Now these graphs we'll continue to talk about very soon and within each video. But today I just want to talk about the candlesticks and the Bollinger Band. There's another graph within the Bollinger Band that I use called the simple moving average that we'll talk about in this daily chart. Now I use all of my charts, I use only the daily chart, which is a time frame which within the chart, so you can customize your own time frame. You can do an 8-hour time frame, 1 hour. I put an 888 minute because it's a Fibonacci sequence within a 24-hour period. There's a 97 minute. But those things, really, I just mainly use the 1 day and occasionally the 8 day. So for example, we change to an 8-day time frame. each candlestick here represents 8 hours before the candlestick opens and closes. So instead of the day, 24-hour, it's an 8-hour. And the difference is usually, so the bigger time frames tell me that will influence the smaller time frames, the shorter time frames. So the 8-hour, the 1 hour, the 30 minutes, the 1 minute, not the other way around. I found that the larger time frames influence the smaller and not the other way around. So that's why I use such a big time frame. And this time frame is consistent with the indications that I have set. It's a bit more consistent. So for now, we'll go back to the daily time frame. And we'll talk about the simple moving average within the Bollinger Band. Now, the simple moving average is the orange and green lines. So let's look at this reversal that happened. So from here to here, the market went down until there was a reversal point, a pivot point here, until it started going back up. Okay? Between the green and the yellow, that is your support area. This whole area here. And sorry, I can't shade it in, but that is the general support area. When there's an indication, a trend of an upward trend, the price shouldn't fall below the orange line, which is the lowest part of the support line. If it does, it's usually an indication that there's going to be a downward trend at the current moment or in the future, as you can see here. Here, this is the pivot point of an upward trend going down. It breaks, in one day, it breaks the support line and automatically breaks even the Bollinger Band. It goes all the way down here, indicating a downward trend. Now, there's these graphs that are my trend indicators that I'll explain later, but I just want to explain this graph for now in a nutshell. I'm not going too far into it. The values I use are, let's see if I can show you if you're interested. Have a Bollinger Band and moving average 5, 15 to 20. That's my setting. And you know, that was just a setting that I used for a video that I learned from was the profit market on YouTube. I learned a lot of my education on there. Very informative gentleman from the States that taught me a lot about the market. So profit market, look him up, he's really good. So yeah, let me know if you have any questions, but in a nutshell, that's just what the Bollinger Bands and the moving average lines are. So for example, when there's a downward trend, so here's a downward trend indication because it went past the Bollinger Band. Let's talk about the opposite way. When there's a downward trend on the support lines, they should be the same within these two lines, within the orange and green lines. So when there is a downward trend and the candlesticks start moving past the support line, which is the orange line, the support area, then it's an indication that there could be a future reversal. So keep that in mind. It starts to reverse, but it doesn't. So it goes down, and here's the pivot point. The reversal happens here very soon when it goes outside the Bollinger Band. It goes up, goes down a little bit, and goes straight up again. Now, this is a massive increase, and it's a good opportunity to invest if we paid attention to all the key signs. that I've shown you today. So that's in a nutshell Bollinger Bands and simple moving average. And thank you for watching. Remember, crypto is very risky, and I'm not ready to buy now. But as you can see here, I want to talk about this current situation. There's a reversal here of a downward trend happening now. Now this marker has gone, two markers have gone down outside of the Bollinger Band. What I'm waiting for is this candlestick. I never trade unless the key candlestick that I'm looking for has closed already. And I'm looking for this candle to close above this particular red candle's open. So at this point right here where this line is, it has to go past here today. If it doesn't, I'll guess that there is a downward trend continuing to happen. Very quickly, I'll just talk about this indicator, which is the slow stock RSI indicator. It's RSI, have the value 14 here. Now I've created an imaginary line here that I call the floor. And you can see here at this point, it bounces on the floor before it goes back up. Here it bounces on, here it bounces on, here it bounces on. And I'm waiting for it to bounce on the floor here before I think it'll start going back up. So I'll wait and see what happens, but I won't make a move unless that particular bounce has closed. I'll show you in the future video the next time, and possibly do a live video. So don't forget to subscribe, because the next video is going to be live, and just remember to click that little bell sign, the notification bar, and subscribe to my channel. See ya.